Hey, welcome to the closing beat, everybody. Happy Tuesday. Yes, it's Tuesday. That's right. I got the day right. Hope you're having a great day today. I'm just last second pulling things up here for you. Busy day, right? Earnings galore, but all you guys really probably care about is Apple's earnings. So promise we will get to that. Listen, we got Fed Day tomorrow. By the way, we're financial advisors here at Jazz Wealth. I can't talk and do the same thing at the same time, so I'm just going to go like this. Boom. And we'll just wrap it up with that. All right, so right-hand side of your screen, that's the left. The right-hand side of your screen, you see the markets today a little bit split, a little bit quiet. Look at the bottom chart on the right-hand side there. You've got sort of a quiet market. Little sell-off this morning, but mostly that was pending home sales and stuff this morning. But basically, the market was rather quiet. Now, reasons for that, you got the Fed meeting coming up tomorrow. So nobody wants to make a decision going into the Fed meeting. The S&P 500 hit a record high again today, just added 2 points. It didn't have that hard to try. We've also got the last day of the month here. So sell in May and go away. Have you heard the phrase? Have you heard the saying? Well, we're actually going to cover that Thursday for our customers. We do a portfolio and a market update like no advisor does. And I'm not just saying that. No advisor goes through what I go through to set up a sort of a summary of the markets for the month and going forward what to expect. We're going to really analyze this sell in May and go away with some research that you have never seen before, and so we'll let you know kind of how all that works. Tomorrow's really the important thing is the Fed meeting tomorrow afternoon at 2 o'clock, 97% chance that they leave rates unchanged. So it's really supposed to be sort of an uneventful change, but with Trump out there talking about what he thinks the Fed should do. Did you see that today? He said that the Fed should cut rates by 1% right away and start buying bonds again. Crazy, man. Like, come on. Do your thing, man. So it could be a pretty eventful day if Trump has his way. But anyways, here's the thing. 97% chance that nothing's going to happen tomorrow as far as rate changes. The Fed has said basically we're going to go the rest of the year without raising rates. Investors or people that participate in the bond market, they figure that there is a 90% chance of a rate cut. Now, not by 1 point like Trump wants to do, but a rate cut this year, right? So chance you actually maybe see a rate cut, or at least there's a lot of people betting on that. So statistically speaking, 90% chance of a rate cut, but not by 1 point. Come on, not by a point. Anyways, here's what you want to know. Performance afterwards, right? Is Fed Day a good day? Is it a bad day historically? We try to cover it when things come up here. Average change for the S&P is 0.3% if they don't change the rate. So it's widely expected they're going to hold rates the same tomorrow. Average change since 1994 when the Fed leaves rates unchanged is about 0.3%. So 1994 is when when the Federal Reserve started opening their mouth and actually saying what they were going to do. So that's as far back as we can go there. Since 2016, the problem here is the percent change for the S&P has been getting worse and worse. So typically it's a bullish day when they hold rates. However, generally speaking, Fed days are starting to decline. Average decline is about 0.25%. So it's been sort of fading away the performance there. We'll see. The real excitement, what you care about is not necessarily the one day what happens, but a month going out, 3 months, and so on and so on. Average change after a month, that's where it gets exciting, is just about 1%. Now that's important this go around, right? We want that to happen this go around because of the sell in May and go away, which I'm going to sort of disprove to you on Thursday. But May is typically a quiet month, and so if we have the sort of the backing of the Fed statistics, right? A 1% gain after 1 month of the Fed making their announcements. That's pretty cool, right? So we could probably use that there. All right, let's move on. That's enough of that stuff here. Earnings-wise, since yesterday's close, 150 names have reported. Actually, a couple more than that. Revenue, upticking, right? So we've been talking about a lot of names beating on earnings. Almost 70% between yesterday at the close and this morning beat on earnings. So great. That's been a big surprise there. Revenues are starting to uptick as well. We're now breaching that 60% level, which we kind of mentioned that last week, how we started off slow, but towards the end of earnings season, you see that uptick there. So that's pretty cool. Let's take a look at the markets and move on to the good stuff. Here's the S&P 500, new record high. All looking good there. The Nasdaq was lower on the day. You got some pressure from some of the tech names as well as Alphabet. We'll cover that as well. The Russell, I'll continue to point out, that's the major index that just can't seem to get above these highs here. Tried yesterday, but not able to do it today. Small cap there. Let me see. Not doing all that great. Look at the dollar here. So the dollar pulling back. We've been talking about the strong dollar here, but the dollar has actually been pulling back here. So that's hurting the Russell here in the short term. We need the dollar to bounce. Now, hey, I'll tell you what, if you follow that, if you follow the dollar, look at this pullback. It's a brief pullback here to roughly the uptrend or the 20-period moving average. But now if we go back to the Russell, what happened? While the dollar pulled back and a lot of the big caps, small cap stocks pulled back, look what's happened here. Not a whole lot of problem, right? We're staying near those highs. So if the dollar ends up bouncing off this uptrend here, that could help the overall Russell 2000. So that's a good sign. I know it's not as detailed as the description we did the other day, but that's a good sign. I'll briefly go through some of the sectors today. Semiconductors recovering a little bit off of this sort of uptrend. A lot of pressure from earnings, right? Intel, the most recent one that's kind of pulled back the overall sector. It did get a little too far too fast, so mentioning that, how it's totally normal to pull back, I think that's totally okay. Nothing there. Still got a gain of about 30% on the year, though, if you're a semiconductor investor, so you're not complaining too much. Communication services, you're going to see down here towards the bottom. That's a pullback of about 2% today. Communication services. The issue with this, by the way, here, Alphabet, which is symbol GOOGL. Alphabet pulled back today. We'll cover that in a second. Worst day ever on record for this stock. Worst gap ever. But this stock and both classes of Google stock, Alphabet stock, make up 24% of the XLC. So now you can kind of understand. Alphabet has a really bad day. Both classes of stock make up 24% of everything that's inside of this ETF. So it's natural that that's going to have a bit of a weak day as well. No problem there. Transports, I'll point that out real quick. So you got transports a little bit higher today, but right on that moving average, just right on this little uptrend. Still some room and some price support down here. Hey, if you're in the dojo and you're one of our customers, you can click this arrow over here. Not sure if you can see that. Click the arrow. And you could draw on the charts if you like. A little fancy feature there. So, fancy. So you got price support down here. Any pullback into that area, people would likely get pretty excited by that. Transports did well. Remember, they did do well because of the rails. So you had Norfolk Southern, look at that blast off there, did really, really well. CSX led the way with the earnings there with this big gap up. But since then, they haven't done a whole lot. And so because of that, you've got UPS reporting earnings there the other day, really hurting this sector in general. And so if you look at the IYT, which is comprised of all of that, this pullback is really sort of understandable, right? You kind of get like, all right, that's fair. UPS put a little pressure on them. The rails took a little bit of a break. Those are some of the top holders in that category, so totally understandable. But all you really care about is Apple, and I'll be 100% honest with you. I did not prepare my Apple notes, so let me do this. You're going to watch me do this in real time. Here we go. So Apple reporting earnings after the close. And headline numbers are going to be earnings and revenue. Earnings better than expected. Wow. Okay, really good. Earnings better than expected. Revenue beat by, call it 600 million or so. Holy cow. What's a 600, 700 million mistake there? Look, we beat by 700 million. Holy cow. Let's look for services. That's the big one there everybody's looking at. Services revenues up by 16%, so really good in services. Stock price is naturally higher. We've got their conference call coming up anyways. Guidance, the company guided mostly higher, pretty much all higher. Overall revenue guidance higher by about $1 billion. So really a textbook earnings for Apple just on the surface of what I'm looking at here. They expect to see gross margins around 38%. You know, see how much you pay for that stuff? Whew. God, that's expensive. A company that can demand that high a margin, that's just impressive there. So dividend, if you own the stock, you're getting a dividend increase. We happen to own the stock so in our funds, so we've got a 5% increase to 77 cents for dividends there. Let me see if I can get a little bit more for you, because usually I do spend some time working through this here. Well, remember yesterday we talked about VGT. The ETF VGT had the largest inflows into that ETF ever in history since 2004 when it first came out, and that makes up 15% of Apple. So VGT, if you're an owner, yesterday was your hint that everybody was diving in and pretty much betting on Apple. So really, really good day on tap for that, provided Apple stays where it was. Here's something interesting. So I'm going to cover this for a second, right? Stay with me. We've been talking about the strong dollar, right? And so the strong dollar helps your Russell 2000, Russell 1000 companies, your small cap companies here in the States. It hurts the global companies, Apple, Intel, right? 3M, Caterpillar, things like that. It hurts them. So Apple has even said in this earnings report, we took about a 2% hit to foreign exchange. That's because of the weak currencies around the world, strong dollar, and strengthening here. Now, these guys are geniuses, man. I mean, you got to give them a break, man. They're total geniuses. Okay, so here's what tends to happen. Company reports earnings, and they go, we did well, but you know what? We could have done better if it wasn't for the damn Forex. Shoot, we don't know what it's going to be like going forward. Well, next earnings season, if they happen to miss on any numbers, they can blame it on foreign exchange. Apple took it a step further and said, about a 2% hit foreign exchange for our overall revenue this quarter. This is second quarter for them. But going forward, they priced in another 3% in foreign exchange issues. So they believe in a strong dollar as well, so much so that they told Wall Street ahead of time, we're guiding forward to let you know foreign exchange will be an issue. However, they guided much higher than Wall Street expected. So that's, in short, that's a reason to celebrate, right? Apple is essentially saying, even though we have these costs that are going to be a bit of an issue, we're still expecting to beat what you think we're going to do, Wall Street, in the third quarter. So really, really good earnings. Just, again, from what I'm looking at, really, really good. So if you're an Apple owner, it looks like Apple's going to be at new highs for the year. That's a good sign. I hope you guys all that own it got a chance to be a part of that, and hopefully it stays there for you. All right, let's go back here. Let's look at some other stuff. I don't want to take too much of your time. We can focus on Apple at the end as long as I cover everything. Alphabet, like I said, worst day. Basically, you went to bed owning the stock. You woke up and you owned it for $100 less than if you bought it yesterday, or $100 less. That's the worst gap since their IPO, their actual IPO in 2004. Not a good day. That would be my equivalent of someone falling out of a 10-story building, which I'll say thank you to Ben, who sent me a study about people falling out of multiple stories of buildings and the success rate of actually being alive and being able to withstand a 10-story fall. And just it wasn't a joke, this was dead serious. If you hit scaffolding on the way down, like if you're going to fall out of a 10-story building, by the way, hit some kind of scaffolding or hit the building on the way down. Increases your odds by a little bit. So thanks, Ben. Fascinating study. Knows I'm into the geeky stuff. General Electric shares were higher here today. Beat by 5 cents. The CEO basically, he's trying his damnedest to get this company back on track, streamline everything. He confirmed basically that the projections that Wall Street had in play for 2019, that they were going to meet that. So very positive there. They beat on 5 cents, if I didn't already mention that. Western Digital wishes they could say something similar. The stock ended up finishing higher on the day, but not a good earnings announcement. They only earned 17 cents. All right. They expected 46 cents, so a decent miss there. Rather decent miss there for them. But hey, shares closed above the 50-day moving average, so all in all, not too bad. I don't really have much else to say about that one. McDonald's did break to new highs today. They had earnings that came out better than expected. Same store sales came in great. They earned 3 cents more than expected. $200 right here. We talked about this the other day. $200 price resistance is going to be your issue there in the short term. Do you like IPOs, do you? There's an IPO, it's called Beyond Meats, and you can probably guess what they do. It's like vegan meat, which you can't really call it meat. It's just like vegan stuff. Anyways, they're going public, and they raised their valuation basically to $1.5 billion. Look for shares between 23 and 25. And then, special shout out here for an Ecolabs shareholder. Earnings beat, revenue missed, didn't matter. The stock's still killing it, remaining at highs there. Just incredible how strong that is. Thought I'd point that one out for you. What else? General Motors beat on earnings, missed on revenue. Oh, this is interesting. Look at this General Motors. So the stock was lower. You're like, what happened? Not that bad. They beat on earnings, missed on revenue. So they beat on earnings. But if it weren't for the positions that they have in Puget and Lyft, the company wouldn't have beat on earnings. They would have shown a loss. So yes, they beat on earnings, but only because they're invested in Lyft and Puget. If it weren't for those two investments, they would have missed on earnings. That would have been so good for them for getting a little support from Lyft, and Lyft's been doing a little better, right? That's pretty crazy to see, though. That's not a good sign for General Motors, and I think that's probably why you see the stock lower. People going, okay, so the earnings beat didn't come from you guys actually doing anything good, but simply investing in another company? Okay, that makes it a little difficult. All right, happy to answer questions if you have any, and then I will get out of your way, let you get back to doing what you do. Yeah, McDonald's, decent day. It didn't finish too strong. Wished it would have finished a little stronger, but not too bad. It's a little extended in the short term, so I kind of understand. Mass Effect says he's tried the Beyond Meat burger patty. Is it good? Yeah. It's just, if you don't have to try it, why try it? I don't know, not a fan. They had something like that at Chipotle for a while. Maybe they still do, but not my thing. Jake says Google did say the same thing about currencies. You are correct. Yep. Thank you for pointing that out. They did. Yep. Let me see. Nice. You think Apple's going to go to 220, do you? Well, it's at 210 or something right now, isn't it? So next line in the sand for Apple is just over 220 as far as any kind of price resistance. Depends on how picky you want to be. If you really want to be picky, you got a little price resistance, 221, 22 right in that area. But yeah, the next sort of stopping point is prior highs, right? That puts you about 230. That's impressive. Past your little the Fibonacci areas there that people like to look at least as of yesterday. Or tomorrow. As of tomorrow, it will be. Yeah. Nice. So you're asking, was PTC a bad buy? I can't say if it was a bad buy or not. I can say that PTC from the earnings gap there is beaten up. It's been punched a bunch of times. I know I keep using the same analogy. It's been punched a bunch of times, and right now it's kind of like, whoa, what happened? I just got punched. I don't know where I'm at. I don't know what's going on. You wouldn't expect that to just get up and walk away. So I don't know if it's a bad buy, maybe just bad timing for the buy. Yep. Hey, actually, hold on. Forgot my list. Sorry. So tomorrow we got earnings-wise, CVS, Humana, Johnson Controls, Lumber Liquidators, Sprint, Yum Brands, American Yum Brands, Kraft Heinz, and QCOM. QCOM is going to be the focus after hours. You also have first thing in the morning manufacturing numbers that tends to be a market mover, right? The last time we got these manufacturing numbers, they came in better than expected. The S&P was higher by 1.16%. So tomorrow morning, they'll be out tomorrow morning, 10 o'clock Eastern time. So that could be a market mover if they beat there. If they miss, it could also be a little bit of a struggle, but Apple's probably going to help hold everything up. Then don't forget, we have the Fed rate decision. It's my cheat sheet. We got the Fed rate decision tomorrow at 2 o'clock, and then the press conference where they're just going to talk about it. Everybody's going to be focused on the conversation. Yep. Let's see. You invested in Airbus. What are your thoughts with the unfortunate Boeing? It doesn't matter. Yeah, it doesn't matter. Airbus can't make more planes faster. They're already making as many planes as they can. So Boeing, has taken the good approach to sort of make the best of this. But you can't go to Airbus. You can't go over there and say, I was going to buy 100 Boeing planes. I'm scared now. I'm going to go, instead of the 737, I'd like to buy an Airbus. Airbus is going to be like, go to the back of the line, man. You know it's going to be 4 years. So that's a tough one. By the way, you have a Chinese airline, sneakily. They'll be ready by the end of this year. So and a Russian airline as well. I don't think they're quite as ready yet. But you're going to have Boeing, Airbus, and now a Chinese airline. Nobody's talking about that. Chinese airline. They're going to come in there and try to steal some business. So just a heads up. So going to change the light to green? No, the market's got to earn it, man. I'm not changing the light until it earns it. You like UNH at a discount here? Yeah, the sector and everything. I would like it if it sold off a little bit more. I can't like tell you when to do what you do there, but it did have a great sell-off. I like that sort of thing, that panic, blood in the streets type sell-off. That's what I'm interested in. Yep. All right. Cool. Well, anyways, I'm going to wrap it up there. Hope I helped you in some way. We'll be back again to do this all tomorrow. We'll cover everything again, probably cover Apple a little bit more, and Fed Day tomorrow. So expect, by the way, the markets to be rather quiet in the morning, the action starting later in the day. If the ISM manufacturing numbers come out at 10 o'clock and they beat, or there's something more exciting than what we expect, you could see a lot of excitement there. But otherwise, just expect sort of a slow and steady into the Fed announcement. We'll see what happens after that. Enjoy. We will talk with you later.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.